Hi to IPO subscribers. Welcome to Ipo-Review. Today, let us review main board IPO from Annu Projects Limited. Here we go on IPO review. So this is the financial status and performance of the company, the basic fundamentals of the company as generated by AI-powered software. So based on the metrics given to the software, this company has been categorized as a healthy company. Let us see what are the financial metrics that made the company a healthy one. So first is solvency, and solvency, that ensures the sustainability of the company. Here you can see all the metrics are positive. So solvency is very strong. Coming to liquidity, liquidity ensures the survival of the company. So current ratio is 1.77, quick ratio is 1.6, is very good. So liquidity wise, the company is very strong. So that is the reason why this company has been categorized as a healthy company. Coming to operational efficiency, receivables turnover 1.29, it should be more than 7 to 8. And coming to trade payable ratio, it is 2.59. Somewhere it should be more than 8. Okay, only these two are negative. So this will be changing from time to time. So it's not a fixed one. And financial irregularities, no financial irregularities have been identified. Profitability, EBITDA 53.53, EBIT is 50.44 crores, PBT is 46.17, and PAT is 33.21 crores, very good. Cash profit is 36.3, and EPS is 6.91. So EBITDA margin is 21.88, very good. Net profit margin is 13.69, very good. ROC is 22.6, still good, and ROE is 21.27%, very good. Book value per share 32.47. Okay, good value. So coming to cash flow from operating activities, it is minus 24.7 lakhs, and the net cash flow is plus 2.43 crores. That is what about cash flows. Coming to market values, this 99 rupees is the cap price of the IPO. And based on the 99 rupees cap price earning ratio, we are getting somewhere 14.32. It's very good. It is within the benchmark levels of 25. And price to book value is 3.04, just above the required ratio 3. So it doesn't matter. So let us see the projected also. Projected, after seeing projected values, then we can have an opinion on that valuation. So coming to growth indicators, all are positive. So the company is a healthy company, and one can take a positive decision. So now let us go on IPO review. Yeah, here is the IPO review. Annu Projects IPO, reasonable valuation, but can cash flows support the growth? Because we have negative cash flows from even operating activities also. So that's what the question comes. Annu Projects is the EPC infrastructure company operating across telecoms, sewerage, and gas pipeline infrastructure. The IPO offers growth exposure to infrastructure spending, but investors need to look beyond the headline PE because cash flow quality and working capital are key concerns. The IPO is scheduled to open 25th August and 26th and close 28th August 2026 with 94.99 price band and 175.06 crore is the fresh issue. So the business review overview, Annu Projects infrastructure EPC player, telecom infrastructure, optical fiber cabling infrastructure, tower and communication infrastructure. Customers include BSNL and other infrastructure companies, sewerage infrastructure, pipeline laying, sewage treatment plants, pumping stations, and manholes and related civil infrastructure. Gas pipeline infrastructure, MDPG pipeline installation, domestic and commercial gas connections, and the customers include GAIL, Gujarat Gas, and Indraprastha Gas. Growth opportunities benefiting from continued infrastructure spending, exposure to telecom connectivity, urban sanitation, and gas distribution. So IPO, where is the money going? So 175.06 is the fresh issue. So 115 crores for working capital, very good. As it is, the current ratio is very good. They have very good current ratio. And as this 115 crores also will support further. And 15.41 is machinery equipment. Good. Both are what you call a development oriented. The company can have a good bright feature with these 175.06. Balance general corporate expenses and key investor takeaway. Around two-thirds of the IPO proceeds are going towards working capital. Doesn't matter. This tells investors that cash requirement are significant in the business, of course. It's true. And valuation, the key attraction. IPO price 94.95. Valuation metrics EPS 6.91. PE 14.3 times. PB is 3.3. Very good. Projected PE is 11. Projected PB is 2.14. Very good. Good valuation. So valuation is reasonable. At around 14 earnings, the IPO does not appear aggressively priced for an infrastructure EPC company with a growth potential. If the company can sustain strong ending growth, the valuation could become more attractive. Very good. So, but is a reasonable PE enough compensation for cash flow and working capital risks? So as it is, the working capital risks are not much because the company current issue is very good. And only thing is cash flows are negative. Cash flows are negative with the reason maybe they might have gone for a good amount of investments, or they must have been some good amount of repayment of finances. So that can be the reason. It is not an issue. It's not a big issue. And of course, there is a cash flow from operating activities also minus. And so there is a little bit concern about that one. So that is the key investor question. So financial quality looked beyond PE. Positive revenue and profitability growth, health reported profitability, infrastructure sectors exposure, established customers, strong promoter holding. Concerns, negative operating cash flows for the last 2 years, receivables outstanding for more than 6 months. Wow, this is the reason why the cash flows are negative. High working capital requirement, of course, because of these receivables and the contingent liabilities, EPC execution and payment cycle risks. So that is the only concern of the high receivables. The receivables outstanding for more than 6 months means one should think. Investor message profitability looks healthy, but cash conversion needs to improve. So promoters and governance, promoter holding 89.11% before IPO and 65.05 post IPO. High post issue promoter holding shows continued commitment. Quote. However, related party group company exposure should be monitored carefully because of potential conflict of interest is common in all the companies. And market sentiment, the broader Indian IPO market is currently active, with several IPOs coming to the market during the week of August 24th, 31st to August 24 to 31st, 26. Annu projects is among the main board offerings in this busy IPO calendar. For Annu projects, specifically, subscription data was not yet available before the issue is opened, and available pre-issue GMP data was around 0, indicating neutral rather than euphoric. Enough shares in payment at the stage of GMP is at the stage. GMP is enough share and should not be treated as a evaluation measure, of course. GP cannot be an evaluation measure. Market sentiment, neutral, wait for demand and signals, wait for demand signals. So watch QIB subscription, NAE subscription, overall subscription, GMP movement, listing expectations. Strong QIB participation would improve confidence, of course, very good. And investor scoreboard, business model positive, infrastructure opportunity positive, customer base positive, growth potential positive, valuation reasonable, promoter holding positive. Cash flows concern, working capital concern, receivables concern, governance watch, market sentiment neutral, overall cautious. Only thing is, because they are into construction activity, particularly government bills, they don't get so easy. In general, it takes 6 months time. Only thing is, since the company is going for additional working capital and as a raising through IPO, I think they should take care of. But what they should do is they should minimize the receivables 6 months time to the extent possible. Otherwise, everything is okay. They best have a healthy company. Healthy company itself assures a good amount. And further, I told this was whatever IPO is there, that will strengthen the company further. So, final investor view. Annu projects cautious subscribe and why consider reasonable 14 PE. present ratio, infrastructure sector opportunity, strong promoter holding, established customers, fresh capital goes into business. Very good. Why cautious? Negative operating cash flows, high working capital requirement, long outstanding receivables, contingent liabilities, related party governance. So, okay. Closing statement, Annu projects offers a reasonable valuation and attractive infrastructure exposure, but the real test is cash flow conversion. Cash flow conversion. So first of all, they should concentrate on realizing the book receivables as early as possible. They should be minimized 6 months to 2 months at least. But in the government sector, most of the customers are government sectors, no. So in general, it will be there. Only thing is they are going to have good amount of additional working capital. No? I think that will take care of. At around 14 times earnings, the IPO looks reasonably priced, not a deep value opportunity. Therefore, our VP is cautious, subscribe with the cash flows being the key metric to monitor after listing. Here, I should tell you, there is some future earnings for the investors. In general, most of the companies, they don't leave any future earnings to the investors. Here, investors can have good amount of future earnings and the company is a healthy company. Healthy company means governance, corporate governance, very good. So the investment is what they call built-in safety. And next is a good amount of growth will be there and good amount of price. We can expect good amount of price increase also. So that's what overall the company is a healthy company and you may take your own decision. So as always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. Thank you very much. If you found this analysis useful, please like the video, subscribe to the channel and stay connected for more detailed IPO and stock market research. Thank you. Thank you very much.